Good evening and welcome to the Money Show. I'm Kavita Thapliyal, and this is a show that puts your money matters front and center in a world full of financial noise. We are here to bring you clarity, confidence, control over your personal finances, whether you are planning for retirement, building a portfolio, navigating debt, or just trying to make smarter money decisions. This is your space, your guide, your weekly check-in with your wallet. Every evening, we bring you insights from top financial experts, decode the latest trends, and answer your burning questions on saving, investing, and spending, and everything in between. Because here on the Money Show, we believe one thing: you don't have to be a finance expert to take charge of your money. You just need the right advice, and which is what we give you on this particular show. Also, we answer your portfolio queries just in case you have anything related to your financial portfolio. Send across your questions. You can WhatsApp us your queries. You can also email us your questions, and those are flashing on the screen. You can just note it down, and we will have your live financial planning done on the show. But then let's begin on the first topic of the day. Mutual funds have steadily become the go-to investment options for millions of Indians. And behind this growth is an ecosystem of mutual funds distributors who help investors choose the right products and stay invested for the long term. But have you ever wondered, what does it take to become a mutual fund distributor? How is the distribution base in India growing? What are the today investors really expecting from their advisors? And how are new age platforms different from traditional distributors? So today, we put the spotlight on the distribution business, the opportunities, the challenges, and the revenue model that makes it work, along with new mandate that's coming from SEBI. Joining us is Aditya Agrawal from Wealthy.in, who will help us decode how the space is evolving and whether distribution could be the right opportunity for you. Hi and good evening, Aditya. Welcome to the show. All right, so let's begin the conversation on mutual fund distributors. And joining me is Aditya Agrawal. Hi, Aditya. Good evening and welcome to the show. And a very crucial aspect of mutual fund distributionship. I really want you to help our viewers understand how does the structure work, because a lot of investors actually buy mutual funds or maybe enter equity market with mutual funds having a distributor. So let's begin with the latest update that and a new SEBI mandate on the revenue structure, commission structure for mutual fund distributors.
Sure. Thank you, Kavita, for highlighting the role of mutual fund distributors on your show. And as you rightly said, our regulator has recently announced a new incentive on a distributor who is onboarding a new customer to industry from B30 markets. As you all know, India, we are still very far away from all investors participating in equity markets. And for whatever reason, not every investor is still uncomfortable. And if we know, maybe 2 years back, we used to have this additional trail commission in the smaller towns. Idea was to incentivize onboarding of investor from smaller towns, but SEBI did away with that. But they brought back that incentive of onboarding a new customer, new to industry customer from B30 market with a one-time up 1% upfront fee. And that is capped at rupees 2,000 rupees. So it's a great initiative. It allows a distributor to invest, because there's a lot of time and energy invested in a distributor to educate a customer. So that distributor will now feel motivated to go further deeper into the country and onboard more and more new customers into the mutual fund industry. So it's a very welcome move by the regulator.
All right, a welcome move, but then I really want to understand, and in fact, even the viewers want to understand the entire revenue structure, because we are also focusing on the distributors for Tier 2 and Tier 3, or maybe B30 towns, if I really want to call it that. How does the traditional way of mutual fund distributor it works, and looking at the changes in the industry and even more compliant the way SEBI is actually approaching it, what are the changes, and what the B30 towns has more for them?
Right. So I think let's break it up into three parts. So I think number one is, what does a mutual fund distributor do and how do they earn? So in the simplest terms, they are distributing mutual fund schemes of different AMCs. And for distribution of those schemes, they earn what is called a trail fee. And trail fee is, so let's just give an example. Let's say I'm a client and I'm investing through a mutual fund distributor 1 lakh rupees in a scheme that is selected, recommended, and suggested to me by the distributor. On that scheme, or if it's an equity scheme, that distributor on that 1 lakh rupees will earn about 0.7% in the entire year but it is paid on the asset value every month. So for example, the average asset value of that 1 lakh rupees for that month was, let's say, 1 lakh rupees. It didn't go up or down. So at the end of the month, the distributor will get paid 1 lakh rupees into 0.7%, which is 7,000 divided by 12 rupees. So roughly 600 rupees. So that's how, so all the commissions that are paid out to a distributor is on trail fee. And by the way, this is inclusive of GST. So if I'm a GST registered distributor, my actual income goes down by 18%. So this is the only structure that so far was present for a mutual fund distributor to earn income or earn commission. But as we just discussed, to onboard new customers from B30 cities, the SEBI regulator has allowed AMCs to pay up to 1% of the first application of a new investor who is being getting onboarded from, let's say, a B30 small town as an upfront incentive, which is an addition on top of it. Otherwise, the only way the distributors earn is on the trail fee. And the good thing in this business is that if the client's asset value grows, the distributor's income also grows. So that's why distributor is very much aligned to do the right kind of scheme selection for a client and also incentivize that client should stay in the long term. And that is why if you see majority of the SIP stoppage that we are not talking about on the industry is coming direct rather from direct channel than from regular channel. So distributors actually play a very important role, and that role is very similar whether you look at B30 markets or whether you look at metros. But as I said, regulator has announced a little bit of extra incentive because in smaller towns there is still a little bit more apprehension and a little bit more work is required by the distributor to convince clients to invest their money.
All right, Aditya,
So
I also want...
that's
Sure.
typically how the structure works of our distributors' earnings.
Right. I also want to understand the added role of having more women investors.
Right.
How is that going to be impactful? I mean, I really want to appreciate SEBI as well as AMFI stakeholders like you who are really working towards women financial literacy and investor education. But now this is also taking center stage. Okay, how is it impactful, and what are the incentives now to have more women investors on board?
No, it's a great question. So I think two things. One is women who are earning their own money. It will now incentivize the distributor also to onboard that client as a standalone rather than pool that money into husband's joint account and onboard them together, right? So it will, because it's a natural inclination for a distributor also now to say that since I'm getting some incentive additional on onboarding a woman client who is the first time investor, I would rather start their investment account separately. So it's actually a subtle shift, but it will allow women, working women or otherwise, to build their own corpus on their own. So it's a fabulous initiative. And we all sort of talk about it a lot that women workforce participation is still in India at 16%. But if you look at, probably investor participation is much lesser, right? So to at least bring that participation to 16, 20, 30% of the total folios that we have, I think it's a great initiative, and it will allow distributors to actually, because I have personally seen distributors. So I recently met a distributor in our Bombay market, and that distributor exclusively works with women and also women teachers. Now imagine that distributor is putting so much energy in just working with women, but so government is actually recognizing that requires extra effort, and that's why they are rewarding that person. And it's something that will encourage the distributor now to actually do more women awareness camps and onboard more women into the whole investing ecosystem. And as women invest more, obviously they will become more confident, they will become more secure about their future, and will not need to depend on their entire family as they also sort of age and look forward towards their future prosperity. So it's a great initiative again by everyone to do special incentive for women.
All right. Now, I also want to understand one aspect, where a few things were reported from the mutual fund distributor side. I mean, the regulator is definitely keeping a very close eye on this and have very stringent rule. But then, there were a few stories on opting for more commissions, So after every year, they were asking investors to change their schemes. Things like that are also reported. How are you making sure that the end investor doesn't have to go through such kind of experience? What are the check and balances over here which are coming from the regulator, and what is something that as an investor you should be aware of?
So again, so I think regulator did a great thing by removing all front loads in mutual fund schemes. So because when there were front loads present, there was actually reported, such instances were reported. But since the front loads have been removed, if you look at instances reported, there are hardly such instances getting reported now, that because of additional commission, people are churning schemes. Second is because now equity obviously has, LTCG, which is 12.5%. It also makes it hard for people to sort of convince that why should you withdraw money and put it somewhere else. So that again has become like kind of a balance, checks and balance. But ultimately, see, in this business of distribution, the difference between commissions across schemes is not so much. For example, if I look at, let's say, a large cap from AMCA versus a large cap scheme from AMC, the difference between them will be hardly anything. It will be probably 5 basis points, 10 basis points, if at all. So regulator has also done a great job of standardizing, how the TERs and commissions, etc., get paid. So that difference of 5-10 basis point is so small for it to matter meaningfully to a distributor to churn aggressively. Instead, a distributor is rather, his incentives are more aligned to pick up a scheme that is likely to give better returns, because you just understand that distributors' earnings are linked to the asset value. So the more the asset grows, their income will be higher. Rather than, so today, if you look at distributions, that's actually one big thing that has changed. That in the distribution community today, if you ask any distributor that how do they plan their business, they plan their business by figuring out that how can I get maximum wallet share of my client, and how can I grow their wealth the maximum. Because the more I get the more I grow their wealth, the more the wallet share I'll get. And my incomes will also grow only when my client's portfolio value grows. So to that extent, SEBI has done a great job in last 4 or 5 years to align incentives for distributors, AMCs, and clients. And that's also the reason why you're seeing the growth. Today, distributors are, by the way, the fastest growing in the country. They are winning market share from banks very aggressively. And in fact, yesterday I was speaking to someone in Ranchi. In Ranchi, it's a 24,000 crore AUM market. Distributors today account for almost 50% of that AUM in a market like Ranchi. Right. So distributors are gaining share simply because they're able to provide value, and for that value, they are compensated in a way where their growth is linked to clients' growth. So that's why this whole industry is sort of growing well. And clients have also realized that, I am not able to do things on my own. I need someone who can help me figure out what's the best scheme, what's the best way to invest. And that is why this whole, sector and growth that we are seeing in the distribution space.
All right, I think we spoke about a lot of very crucial aspects as far as the role for distributor has changed and the way commission and incentives are going to work in the industry. But then from an investor's point of view, one really has to be very mindful about having the right kind of distributor. And also before that, it's important for an investor to do their particular homework. Yes, you can have a distributor to get inside the industry and maybe manage all your investments, but the onus lies on you because it's your hard-earned money. Selecting the right kind of investor and the kind of schemes, even they are suggesting, just go back and do a back channel check, in order to understand what are you being recommended. Is it aligned with your financial goals and your risk appetite? Well, with that, it's an end for this segment. Thank you so much, Aditya, for being on the show and helping our viewers with this today. Thanks. Time for a quick break on the Money Show, but then on the other side, we'll be joined by Anil Rego, who will be answering your portfolio queries. So just in case you have anything on your mind, even right now while watching the show, quickly WhatsApp us your queries.